Hello there. Over the next few minutes, we're going to walk through some of the biggest changes to hit the UK rental scene in, well, a generation. We're talking about the Renters Reform Act and a total overhaul of the landlord tax system. And guess what? They're both landing in 2026. This is a really essential briefing put together by the expert tax advisors at My Tax Accountant. So if you own a rental property in the UK, this one is for you.
Let's kick things off with a number that should really make you sit up. 864,000. If you're a UK landlord, that is how many people are being pushed onto a brand new tax system starting in April 2026, ready or not. And just to be crystal clear, this isn't some minor tweak or a new form to fill out. No, this is a fundamental change in how you record and report every single penny of your rental income to HMRC. And that's not even the whole story. This is the bit that catches so many people out. That massive tax change is landing at the exact same time as the biggest shakeup of tenancy laws we've seen in 30 years. It's these two huge shifts, happening at once, that are creating what a lot of people are calling a perfect storm for landlords. One changes your relationship with your tenants, and the other completely changes your relationship with the taxman. So, to help you get your head around all this, we've broken it down into 5 key parts. First, we'll look at this perfect storm and what it actually means for you. Then, we'll unpack the end of no-fault evictions. You'll want to hear that bit. After that, we'll explain the new tax system, making tax digital in really simple terms. We'll also flag a couple of other tax changes you need on your radar, and then we'll wrap it all up with a clear, practical action plan to get you ready. The goal here is to take you from feeling uncertain to feeling prepared. Right, let's get into it. The perfect storm. You really have to see 2026 as a complete reset for the UK's 2.3 million private landlords. It's not just one new rule, it's 2 massive bits of law, one on tax, one on tenancies, hitting at the same time. And understanding how they affect each other is absolutely crucial. For example, the new tenancy rules could make it tougher to sell a property empty, which directly impacts how you deal with the new, higher capital gains tax. You see? That's the storm. Each change makes the other one more complicated. Okay, so let's tackle the first of these huge shifts, the Renters' Rights Act. And you'll definitely want to listen to this part. This isn't just a proposal anymore. It received royal assent, that's the final green light, back in October 2025. The new rules officially kick in on May 1st, 2026, and they are going to completely change how tenancies work in England. So the heart of this change is getting rid of the old system. The Section 21 notice, the so-called no-fault eviction, where you could get your property back at the end of a tenancy without giving a reason, it's gone. Finished. Instead of fixed-term contracts, all tenancies are now going to be rolling, month-to-month deals. To get your property back, you now have to use a Section 8 notice, and you need a specific, legally approved reason. What does this mean for you? Well, it means choosing the right tenants is more important than ever, because these tenancies are now open-ended from the get-go. And of course, that leads to the one big question every landlord is asking. If Section 21 is gone, how on earth do I get my property back when I need to? It's a fair question, a really important one, and thankfully, the new act does give us some clear answers, even if the process has changed. The new rules actually strengthen and expand the reasons you can use to regain possession under Section 8, so you still have very clear, legitimate ways to get your property back. For instance, if you or a close family member need to move in, or if you decide you want to sell, those are now solid grounds. And crucially, the rules around serious rent arrears and antisocial behavior have been beefed up to give landlords more power to deal with difficult situations. The takeaway here is you still have control, but the process is just more formal and you'll need your evidence lined up. Stay with me. This next part affects pretty much every landlord out there. There are other big rule changes you have to know. First, tenants get a new 12-month protected period where you can't give notice to sell or move in. Second, you can't encourage or accept rent bidding wars above your advertised price anymore. Third, those blanket no pets clauses in your contracts, they're now invalid. You have to consider requests reasonably. And fourth, asking for big lump sums of rent in advance is banned. Get any of this wrong and the fines are steep. We're talking up to £40,000. Okay, so that's the tenancy overhaul. It's a lot to take in, I know. Now, let's switch gears and look at the second part of this storm, your taxes. We're talking about making tax digital for income tax, or MTD for short. And please, whatever you do, don't underestimate this. It is a complete and total overhaul of how you record your earnings and report them to HMRC. It's basically moving from one deadline a year to 5.
This timeline is absolutely key. You need to know when you'll be affected. From April 2026, it is mandatory for any landlord with a gross rental income over £50,000 a year. A year later, in April 2027, that threshold drops to £30,000, and the plan is to drop it again to £20,000 in 2028. Now, it's really important to remember that gross income means your total rent collected before you take off your mortgage interest, repairs, or any other costs.
So what does this actually mean you have to do? Let's make this simple. The new MTD process has 3 main steps. First, you have to keep all your records digitally, using software that can talk to HMRC's systems. Second, you have to send a summary of your income and expenses to HMRC every 3 months. Yep, 4 updates a year. And third, at the end of the tax year, you'll make your final adjustments and send in a final declaration. So that yearly tax return is being replaced by a non-stop year-round reporting process. This really is a permanent change in how you run your property business. The days of having a shoebox full of receipts or that simple little spreadsheet you've been using for years, well, they're over for anyone hitting those income levels. Did you know? Recent studies show that almost 70% of smaller landlords are still using manual methods for their books. If that sounds like you, now is absolutely the time to start planning your move to a digital system before you're forced to do it in a mad rush.
And here's my tip, and it's a really crucial one. Don't just sit there and wait for a letter from HMRC to pop through your letterbox. The income that decides if you're in that first group from April 2026 is the money you earned in the 2024/25 tax year, which is already finished. So you should be able to check right now which group you're in. Trust me, being proactive on this will save you a world of pain later on. Now, as if those 2 massive changes weren't enough to deal with, there are other tax pressures building up that are creating a real squeeze on landlord profits. When you put all of these together with the tenancy reforms and MTD, you really start to see the full scale of the challenge that 2026 is bringing. It's all about the cumulative effect of all these changes lending at once. First up, let's talk capital gains tax. If you're even thinking about selling a property, you need to hear this. The tax-free allowance has been slashed down to just £3,000. As you can see here, any profit you make above that gets taxed at 18% if you're a basic rate taxpayer and 24% if you're a higher rate taxpayer. To put that into perspective for you, just a few years ago, that allowance was over £12,000. So this makes selling a rental property a lot more expensive from a tax perspective. And that's not all. If you run your properties through a limited company, dividend tax rates are about to go up. At the same time, HMRC is really stepping up its compliance checks across the board. And with the new MTD system feeding them data every 3 months, their ability to pick through your returns will be better than ever. It's probably no surprise then that a recent survey found 2/3 of landlords who are selling up are pointing to these exact tax and law changes as the reason why. It just shows you the pressure the sector is under. Okay. We've laid out the problems, and I know it definitely sounds like a lot. But now we're getting to the most important bit, the solutions. This isn't about panicking, it's all about preparing. So here's your clear, straightforward action plan to get ahead of these changes and protect your investment. Let's break this down. Here is your checklist for the next few months. First thing, check your 2024/25 rental income to see exactly when MTD starts for you. Do it this week. Second, start looking into MTD software now. Don't leave it until the last minute. Third, dig out your standard tenancy agreement and get it checked over to make sure it's fully compliant with the new act. Fourth, sit down with a calculator and actually work out the financial impact of these tax changes on your profits. And finally, and honestly, this is the most important step of all, speak to a professional tax advisor. Please don't try to figure all this out on your own. And that leads us to our final and most crucial point. The information we've shared with you today is designed to give you a clear overview, and it should be seen as general guidance. It really shouldn't be the only thing you use to make financial decisions. These changes are big, but they are absolutely manageable with the right expert advice. For guidance that's tailored to your specific property portfolio, we really do encourage you to consult a professional. The team at My Tax Accountant is ready to help you build a strategy to get through 2026 successfully. This whole situation is going to keep changing, so staying up to date is going to be vital. To read more about everything we've talked about today and for ongoing updates, please do visit the My Tax Accountant blog at mytaxaccountant.co.uk. And for more helpful briefings just like this one, please subscribe to the YouTube channel. Thanks so much for your time.